Welcome to The Explainer. Let's talk about investing. For a lot of people, that word just conjures up these crazy images, right? Like complex charts and Wall Street traders yelling. But what if it's actually way simpler? Well, today, we're going to cut through all that noise. We're going to get to the real story of how you can build wealth. So let's just dive right in.
Okay, so let's kick things off with a question. And I really want you to think about this for a second. Your money, right now, is it sleeping? Is it just sitting there, maybe in a bank account, quietly losing a little bit of its power every single day? Or is it out there working for you? Is it building your future? Because that choice, right there, is pretty much the whole reason we're talking about investing today.
So to really get this, we need to be super clear on what investing actually is, and maybe even more importantly, what it isn't. So, what are we talking about here? Look, at its heart, investing is just making your money work for you so it can earn more money over time. I love this analogy. Think of every dollar you have as a tiny little employee, and its only job is to go out there and bring back more money. That's it. Simple as that.
And this, right here, is so important to get. Investing isn't the same as saving. It's definitely not the same as trading or speculating. They're all different tools for different jobs. Saving is for short-term stuff, keeping your money safe. Trading, that's all about quick profits. But investing, that's a whole different game. It's about a long-term plan, a strategy to build real wealth by taking smart, calculated risks.
And these ideas we're talking about aren't new. We are totally standing on the shoulders of giants here. You've got Benjamin Graham, who basically wrote the rulebook for value investing back in 1949. Then his student, a guy you might have heard of named Warren Buffett, took those ideas and perfected them, focusing on buying truly great companies. And then John Bogle came along and changed everything. He created the very first index fund, which basically opened the doors for everyday people, like you and me, to invest in a low-cost, simple way.
All right, so that's the what. Now let's talk about the why. Why should you even care about any of this? What's the real point of putting your money to work in the first place?
Well, it really boils down to three main things. First, there's the big dream, right? Building real, long-term wealth, achieving that financial independence we all hear about. Second, there are the big life goals, buying a house, paying for education, and of course, having a comfortable retirement. And third, and this one is crucial, it's about defense. It's about beating this quiet enemy called inflation that's always trying to eat away at your money.
And this chart, wow, it shows you exactly what I'm talking about. Look at that. What cost you $100 back in 1980 costs around $365 today. That's inflation in action. It's this silent force that just eats away at the value of your cash. If your money isn't growing, if it's just sitting there, you're actually getting poorer every year. So get this, investing isn't just about trying to get rich, it's about making sure you don't get poor.
This all kind of reminds me of that famous marshmallow test they did with kids. Well, investing is basically the adult version of that test. It's all about delayed gratification. Are you going to eat that one marshmallow right now, which is like impulse spending? Or are you going to wait and get 2 marshmallows later? That's investing. It's resisting that small, instant reward for a much, much bigger one down the road.
Okay, so hopefully you're on board with the why. But now, how do you actually do it? What's the playbook? Let's get into the core principles, the fundamental rules of the game.
Think of these as the 4 pillars of your whole strategy. Number 1, understand that risk and return are 2 sides of the same coin. Higher potential rewards usually mean higher risk. Number 2, time. Time is your superpower. Seriously, it's your most valuable asset. 3, diversify. You've heard it a million times, don't put all your eggs in one basket. It's true. And number 4, discipline. This might be the hardest one. You have to stick to your plan, even when your brain is screaming at you to panic.
Okay, I want to talk about the most powerful force in the entire investing universe. And no, it's not some hot stock tip. It's something Albert Einstein supposedly called the 8th wonder of the world. It's compound interest. And all it is really is your money making money. And then the money it just made starts making its own money. It's like a tiny snowball that you roll down a very, very long hill, and it just gets bigger and bigger and bigger. And if you want to see that snowball effect in action, look at this chart. It's insane. You invest $10,000 at age 25. By 65, it's worth over 200 grand. But wait just 10 years and invest that same 10,000 at age 35, and it's worth less than half that. That's what that first decade is worth. It just proves that time in the market is so much more important than trying to time the market.
So how do we take all these principles and actually use them? Well, a really helpful way to think about it is with a classic tool called the investment risk pyramid.
All right, every good structure needs a solid foundation, right? Same thing with your portfolio. The base of this pyramid is all about stability. It's your low-risk stuff. We're talking cash, government bonds, things like that. The goal here isn't to get rich quick, it's to make sure the whole thing doesn't fall down. It's your safety net.
Okay, moving up a level, we get to the middle. This is the engine room of your portfolio. This is where most of your growth is going to come from. It's a mix of moderate risk things like stocks and big, stable companies, we call those blue chips, and also super diversified stuff like index funds or ETFs. With those, you can own a tiny piece of hundreds or even thousands of companies all in one go. It's all about balancing growth with that stability we just talked about. And then, right at the very top, you have the pinnacle. Now, this should be the smallest, and I mean smallest part of your portfolio. This is where you put your high-risk, high-reward bets. Think individual growth stocks, maybe some crypto. The key here is this is money you have to be totally okay with losing. If it goes to zero, it shouldn't wreck your overall financial plan.
Okay, we've got the framework down. Now it's time for some myth busting. Let's talk about the big, scary myths that stop so many people from ever even starting their investment journey.
Myth number 1, and this is the biggest one of all. Investing is just gambling. No way. They both involve risk, sure, but they are polar opposites. Think about it. Gambling is a zero-sum game where the odds are literally stacked against you. The house always wins. But with investing, you're buying a piece of a productive asset. You're betting on the house, the entire global economy, which, over the long haul, is designed to grow.
Next up, the myth that you have to be rich to invest. Maybe that was true for our parents' or grandparents' generation, but today, absolutely not. Technology has completely changed the game. You've got apps and brokers that let you buy fractional shares, which means you can own a piece of a huge company for literally just $1. It's not about how much money you have, it's about getting started and being consistent.
And if you need proof that consistency is king, look at this number, $227,000. That's roughly what you'd end up with if you just invested $100 a month for 30 years, assuming an average market return. $100 a month, that proves it. You don't need to be a millionaire to start. It's the small, boring, consistent habits that build incredible wealth over time. And hey, if you ever feel impatient, if you ever feel like you need to sell, just remember this story. Even the master, Warren Buffett, had to learn this lesson the hard way. When he was just 11 years old, he bought his first stock. It dropped a little, and he panicked. As soon as it came back up, he sold it for a tiny little profit. And then he had to sit there and watch it soar to more than 5 times the price he sold it for. The greatest investor in modern history learned his most important lesson, patience, from a mistake he made as a kid.
All right, let's wrap this all up. If you remember nothing else, remember these 3 things. 1, investing is a mindset. It's about discipline and long-term thinking, not about having a ton of cash. 2, the best time to start was yesterday, but the second best time? That's right now, today. And 3, know your why. Understand your goals and the basic rules before you do anything else.
So I'll leave you with this final thought. Every single dollar you have is a tool, and it's just sitting there waiting for instructions. So the question isn't if you should put that tool to work. The only question is when are you going to start? Because your future self is really, really hoping you make the right call.